Sometimes you might think you're chasing something, but options flow can show you there's still room to run. Today, we have a perfect example. So here on the screen, I've got the Qualcomm 215 calls expiring tomorrow. The interesting thing about these is they started buying these at 79. They went to $1, $1.80, $2.30, $2.90, $4.50. Now, most of us at 79 cents entry and seeing $4.50 would think, well, I can't get in here. That's a chase. But let me show you exactly why this is good looking flow and you can still get in here and how the flow tells us it's okay to get in there. Now, if you've traded with me in the past, you've probably seen my high probability options flow checklist. I created this 9 years ago, and believe it or not, it's still the gold standard for finding the best of the best options flow. So let's check this Qualcomm trade against the options flow checklist. It starts with aggressive buying. And if you look here, we've got 1103, 1105, 1107, 9, 11, 13, 23, 25, 32. So over the course of a half hour, they're still just piling into this contract. They expire tomorrow. So that's pretty aggressive because it doesn't have a lot of time for it to do what it needs to do. And if you look at the dollar amounts here, they're increasing with each purchase. So overall, that's pretty aggressive buying. Now, I like to see when there's a specific contract. So sometimes you'll see options flow for, in this case, this is a $215 strike. Sometimes you see 215, 220, 230, 245. Expirations you might see tomorrow, next month, 3 months out. And that might be good for sentiment, but I like to see when they have a very specific thesis in mind, and that's shown by when they go after a very specific contract. So this is all the 5/8 215 calls. So this is a specific contract that they went after. Contract price increasing. Now this is where you might think it's a chase. 79, 87, 90, 68, it did dip there, but then 180, 238, 240, 290, 450. So as they're buying these contracts, that contract price is constantly going up. Now in this case, that's not necessarily because of the buying, that's because of the monster move on the chart, but that's a good sign, and that's what I want to see, is that as they keep buying the contract, the price is going up. I want to see that they're ask or above ask and sweeps. So over here, if you look at this column, there's a few on the bid side, but generally this is all ask and above ask here. And this is all mostly sweeps. Yes, there are a few blocks, and that's okay as long as they're mixed in with sweeps. I don't want to see solo blocks. So these blocks, because they're mixed in with sweeps, are okay. This is not a solo block. Significant dollar amount. Now these are small. You can see 16, 44, 12, 31. Those aren't huge. But what I like about these is that the dollar amount is increasing with each time. And this last one here is for 124 when they were previously doing 12, 31, 36. So this last one here, they put a decent amount into it compared to what they were doing prior. So this is a nice buildup. And then the contract's volume exceeding OI, the color here shows us that. So the way Blackbox colors their options flow, the white here is showing that the volume has not exceeded the OI. The purple is showing that it has. So once it goes from white to purple here, that's telling me that the volume on this contract for today has exceeded the open interest. And I like that because that's showing me that there's an increased activity in these contracts. So the contract volume has exceeded the OI. So here's the options contract itself. This green line here, that's where that options flow came in, where I posted it in the Discord group. And the last trade that was on that options flow was 450. You can see the high of that candle was 535. So on that very candle where they got in at 450, it already went to 535. But look what it did after that, all the way up to 1204 from 535, which is the peak of that candle when I posted the options flow. From 535 to 1204, that is a monster move. Now you might think at 450, where the options flow was posted, remember it started at 80 cents. So from 80 to 450, that might be a chase. Let me show you why that wasn't a chase. Okay, so here's why I don't think this was a chase. Look at these contracts right here. 79, right? 80, it goes up to a dollar 80, 240, 290, 450. Normally you would think that's probably chasing if you're getting in at 450, but look what happened here. The dollar amounts of these contracts are increasing. So they're buying more and more as they're piling in. And over here we have ask and above ask. So that's an aggressive entry. Above ask means you don't care where you fill, you just want to get into the trade. So if these are sweeps that are above the ask and they're still coming in at 450, that's a good sign. That shows me that they think it's going higher. Normally, if it's a chase, what you would see is they're in at 79 cents, 80, $2.40. If it was a chase, what you would see is starting to see bid side flow coming in, meaning they're closing out of those contracts. So the fact that it's up that much and they're still hitting it above the ask to get into this trade aggressively, that told me that they thought there was still plenty of room to go. And looking at that options contract and the chart for that contract, it sure had a lot of room to go.
Now that's how I use options flow to find high probability trades. If you're new to options flow and want to learn, or even if you've been using it for a while but you want a deeper dive into how this works, follow us. We're here to help. We love teaching this. And if you want to trade live with us, we do have a trading group where you can join us where we watch the flow live every day and trade alongside it.